evening. Welcome to Broblennier. It's 27th of Jan 2024. So this is the chart from last week, Jan 2021, where we discussed that Nifty has broken the formation of higher high and higher low, and it is started to make lower high and lower lows. So it has broken this low. So we expected Nifty to pull back towards 0.32 Fibonacci of 19,472. When you plot Fibonacci from June 2022 low towards the high of 22,124, here you get this number as 0.32 Fibonacci. So Nifty could drop towards this like this. So now the budget is also around the corner, 3-4 days left. So we will try to understand Nifty on daily chart as well as on hourly chart, how it will move based on price action indicators and then based on Elliott waves as well. So this was another chart that we discussed last week. We expected Nifty to have finished wave 1 here, and then we expected Nifty to complete wave 2 somewhere near 21,800. So Nifty opened small gap up, right, and made a high of 21,750 and then corrected on the downside. So last week was only 3 sessions that we had. There was a Monday was a holiday, and Friday also was a holiday due to Republic Day. So only 3 sessions were there, and Nifty has, you could say, come down towards 48 EMA. So let's first analyze Nifty based on price action and indicators, then we'll check the Elliott wave. So based on price action, you can see Nifty, we already talked last week that it has broken the higher high formation and higher low formation, right? Higher high, higher low, higher high, higher low, right? Then again higher high, but this time it broken this higher low, right? So now it has formed lower high, lower low, like this is lower low, this is lower high, right? This is the crux of Dow theory, or you could say this is the Dow theory that tells you lower low, lower high formation is a trend shift towards the downside. So now again, lower high, lower low formation can continue for a few days. Again, we could come like this, and then again, a move can be expected like this towards 200 EMA. That's what we discussed last week as well. So 200 EMA is coming near 19,700. With Fibonacci, we are getting 19,400. So somewhere close to those levels, we should have that correction. And we even talked that this correction is not a big deal, and this is actually a healthy correction for us and for the markets. You can see 10% somewhere near 19,900, and if we go deeper towards 19,500, it's 12 to 13% towards our target, and around this point it's 11%, right? 19,800, right? So this much of correction is much needed every once in a while for up move to continue. So we are still bullish on the longer term, but on shorter term it is going towards 200 EMA. That is the scenario that I see here, right? Best scenario that I see here. You can see here RSI divergence. We can see clearly now the price has fallen below 50. So it's clearly that the divergence is now visible and price has started to make lower low, lower high. And this is our signal that the market has turned the trend towards downside. You can see here now the arrow indicator is bending, right? It's still in the bullish territory above 70 and below 30. These lines can go parallel, it may cross one another, and then we can have some bearish trend or maybe a sideways again, and the bulls will again take over, right? So somehow this should happen by the end, by the election time, and after election we should go higher. This is what my assumption is. But yeah, the price action indicators tells you here the price is below 13 EMA. It's currently taking support near 48 EMA. The next moving averages that it can touch is 100 EMA and 200 EMA. But yeah, so somewhere near this it should take support. So we have a good support here near 20,970. Okay, and then we have support here near 20,770, right? So this is 200 points where we have a support. I would assume that 21,000 is very hard to break. So once it goes below 21,000, I would be cautious and I would look for the pullbacks. So after budget ends, it should start the consolidation. That's my assumption is. So somewhere near 21,980. We should find a support. You can look here. This is the low. This is the low of that candle. That is 20,970 something is what the level that we are getting. Here you can see multiple support candles, or you could say this is the area where it could find a support. So I would be cautious and I would exit any short positions that I have near this area, and I would look for pullbacks. So that's all on the price action indicators. Hope you understand it clearly. Let's switch to Elliott Wave and we'll check the daily chart as well as hourly chart, and even we'll check the 15-minute chart to understand the move for the next few days. So here is the chart from for Nifty. So we already talked about Nifty's chart from this point onwards, that Nifty has made a top and it is likely to correct towards this level, right? So now the Nifty's move is clear to us that it is going down and it has made is trying to make a leading diagonal structure, or it could be 1-2-1-2 as well. Depending on the intensity of drop, we would able to understand that. Right now, I'm going to assume this as a leading diagonal structure. Wave 1 finished here, 2 finished here, 3rd finished here, 4 may be finished or may not have been finished yet. 4 stop is at 21,482. There is some room left as well on the upside, and due to the monthly expiry, we had this slow move on the expiry day. So it's little bit doubtful what it is going to do in the 4th wave, whether it has made top here or not. But as soon as it breaks this level, if on Monday, if it opens small gap down below this level, I would be sure that we are already in a 5th wave and it will head towards 20,980 something levels, right, on the downside. And if it opens flat within above these zones, then there is a chance that 21,500 might be tested, and then we'll have a 5th wave going on the downside. So this is the impulse structure, by the way. And if it goes towards 21,500 in a next session, I would be definitely sure that it is a leading diagonal structure and it's not 1-2-1-2 structure, right? So here the A wave could be in place, and then we'll have a B wave consolidating on the upside like this, and then we'll have a C wave, which is dangerous wave, right? So this is the way we can move on the downside. It can even turn out to be complex correction or a flat correction. Both are also possible. As of now, we are assuming a zigzag move on the downside as A, B, and C. So A is a 5-wave correction, B will be a 3-wave correction, and C will be a 5-wave correction on the downside towards 19,400. So this is how I'm like looking at Nifty, considering next 1 to 2 months, and by end of elections, once the results are out or after the results are out, the correction should end and we should head higher in 2024, and we can make even higher targets, maybe 23,000 or even more than that, right? So yeah, hope you understand what is the move that I'm expecting. If it opens flat, expect 21,500 and a correction from there. You can see a channel clearly here. A channel has been plotted between these 2 points and this 3rd point. Then you get move like this, and we can even make a move like this, and then a 5th wave can come. Let's go to the chart and check on 15 minutes how it looks. So you can clearly see here A, B, and C. Okay, if it opens flat, okay, and then heads higher, makes one more top, then this will be a W correction, double zigzag, right? This is X here, and this A, B, and C will be Y wave, right? So this is the way we can assume near 21,500. If it exceeds beyond 21,520, I'm not interested in shorting market. So I will look for the 4th wave's end somewhere near 21,500 to 520 zones. If it ends there, I will look for a short opportunity as 5th wave. Hope you understand there. And if it opens gap down below this point, this is the support, right? 21,250. If it opens gap down, the 5th wave is already in progress. The 4th ended here itself, right? So yeah, hope this is clear to you. If you have any doubts, ask in the comments and let me know how you what is the move that you expect post the budget? Thanks for watching. Have a great day ahead. Bye bye.